Let's turn our attention back to the markets because we have seen some moves coming on the back of that news out of J&J. We talked about the big bump that we've seen in Moderna, but also some of the reopening trades facing pressure in this session. The airlines, these travel stocks, Zoom, a stay-at-home trade getting a big bump in this session on the back of this news. Let's bring in Jason Su, Rayliant Global Advisor, CIO. Jason, the doctor just pointing to some context in the news that we got today, saying that J&J is still a small part of the broader vaccine supply that exists in the U.S. But does the news today change your thesis at all in terms of how quickly things are likely to open up and support some of these businesses that have really struggled?
Well, when you look at what's happening in the market, absolutely, your out-to-play stocks, your airlines, your brick-and-mortar retailers versus the work-from-home stocks, you're seeing a bit of a pullback for the out-to-play stocks. But I think that's a bit of an overreaction, given that J&J really is a tiny part of our overall rollout strategy. I think the market's a little fragile, and it's also responding to a phenomenal rally for the out-to-play or the more value-oriented stocks, which have performed well year to date. So I think this is just a minor pullback. I think the thesis of the economy opening up, global trades going back online, I think that thesis remains unchanged.
The other big update we got in terms of the market this morning was CPI. Obviously, a bunch of investors out there nervous about what inflation is going to look like. We've heard the kind of calm message being deployed at the Fed here. And you could say it came in above expectations, 2.6 year over year versus 2.5. That might be a headline that a lot of media organizations might go with to maybe focus in on the month rise there, 0.6 versus 0.5 expected. But talk to me about how that fits into what we've been talking about, right? A temporary blip in inflation eventually calming out. How do you digest these numbers here?
There are definitely two camps out there. We know the Fed's been printing money, and with the Biden administration, there's going to be a lot of fiscal easing and stimulus that'll continue to be pumping the economy. So there's one camp that worries about economy, going into inflationary regime. The inflationary boogeyman, I think, is had its effect in terms of causing the rate to rise, which spooked the market a bit. But if you look at the latest number, taking out the energy component, it really is a non-event. So it's really a matter of the two camps battling it out. Are we really going to experience inflation? Or is this just a temporary shock in the energy sector that will really have no monetary lasting impact?
Yeah, to your point, it looks like a big chunk of that coming from gas prices surging about 9% in the month. How are you positioning yourself right now, though? Energy is one of those sectors we've heard a lot of guests say they are putting their money, especially given the growth that they're likely to see with the reopening of the economy. Where do you see the biggest opportunities?
Yeah, the energy sector, I think, it's had a phenomenal rally. Again, based on the thesis of the economy opening up and people are going to be out to play. We've seen some pulling back in prices, giving up half the gain year to date. And I think, again, it's really due to the fragility in the market psychology. And I think that's an overreaction to what is a unchanging thesis of the economy is going to open up and there's going to be pent-up demand to go out and travel. And energy prices are continuing to have upward pressure driven by both, the airline sector and the automotive fuel consumption. So I think, again, the strength in fuel prices will continue, and any pullback really is an overreaction to any imperfection in the rollout.
Yeah, we had Tom Lee was out with a new note, too, talking about the way that it's been traded down 8 of the last 10 days. When you go back and look at that, that tends to mean good things for forward 3-month returns when it comes to the energy sector. But I wonder how much of this that we're seeing now play out in regards to the reopening, hitting airlines, as Aikiko pointed out earlier, as well as cruise lines and everything else that stands to benefit. We've talked so much about that rotation into those cyclicals. But what this might do for maybe an unwinding of that rotation if this rollout reopening rather looks like it could be slowing after this J&J news or the global implications of that. How much do you see this kind of unwinding in the weeks to come?
Well, I mean, certainly there's going to be some profit taking. The out-to-play economy has benefited tremendously in terms of excess return over the rest of the economy, and so some profit taking. And this is a great opportunity on a bit of a sort of bad news to take profit and get back on the sideline to see whether the rotation will continue to favor the out-to-play economy, or whether the work from home economy could gain some strength. But overall, right, on the back of easing, on the back of money printing, even though there's going to be rotation back and forth between two sectors, the overall broad sentiment is still quite positive. And so it's relative outperformance, but overall a setback to the broader economy and the broader markets is unlikely.
All right, Jason Su, Rayliant Global Advisors CIO, appreciate you taking the time here to chat with us today. Be well.